Hello guys, welcome to i-tutor Academy. In today's session, we will start with accounting as an information system, that is unit 1 of MMBC 004 subsession 4. Okay, so let's start. While discussing the scope of accounting, you must have observed that accounting involves a series of activities linked with each other, beginning with the collecting, recording, analyzing and evaluating the data, and finally, communicating information to its users. Information has no meaning unless it is linked with a certain purpose. Accounting as a social science can be viewed as an information system since it has all the features of a system. It has its input, raw data, that is process, men and equipment, and output are report and information. If we consider accounting as an information system, then we are in a position to make some important observations. There are several group of people who have stake in a business organization, managers, shareholders, creditors, employees, customers, etc. Additionally, the community at large has economic and social interest in the activities of such organizations. We shall now briefly discuss what the information needs of various users are, that is, shareholders and investors, creditors, employees and government, management, customers, and others. In shareholders and investors, since the shareholders and other investors have invested their wealth in a business enterprises, they are interested in knowing periodically about the profitability of the enterprise, the soundness of their investment, and the growth prospect of the enterprises. Creditors may be short term or long term lenders. Short term creditors include suppliers of material, goods, or services. They are normally known as trade creditors. Employees. The view that business organization exists to maximize the return to shareholders has been undergoing change as a result of social changes. Government. In a mixed economy, it is considered to be the responsibility of the government to direct the operation of the economic system in such a manner that it subserves the common good. Controls and regulation on the operation of private sector enterprises are the hallmark of mixed economy. Management. Organization may or may not exist for the sole purpose of profit. However, information needs of the managers of both kinds of organization are almost the same because the managerial process, planning, organizing and controlling is the same. Consumers and others. Consumers organizations, media, welfare organization and public at large are also interested in condensed accounting information in order to appraise the efficiency and social role of the enterprises in different sectors of the economy. That is, what level of profit and output are being achieved, in what way the social responsibility is being discharged, and in what manner the growth is being planned by the enterprises in accordance with the national priorities, etc. Nature of accounting function. Accounting is a service function. The chief accounting executive, by whatever name he is called, holds a staff position except within his own department where he exerts authority. This is in contradiction to the roles played by production or marketing executives who hold line authority. The role of the accountant is advisory in character. There are two phases to the role of the accountant. For the top managers, he works as a watchdog, and for middle and lower level managers, he acts as helper. The watchdog role is usually performed through scorekeeping task of accounting and reporting to all level of management. The helper role is usually performed through the task of directing managers' attention to problems and assisting them in solving problems. Next is emerging role of accounting. The history of accounting indicates the evolution pattern which reflects changing socio-economic condition and the enlarged purpose to which accounting is applied. In the present context, four phases in the evolution of accounting can be distinguished: stewardship accounting, financial accounting, cost accounting and management accounting, social responsibility accounting, human resource accounting, inflation accounting. And Stewardship accounting. In earlier time in history, wealthy people employed steward to manage their property. These stewards rendered as account of their stewardship to their owners periodically. And financial accounting dates from the development of large scale business and the advent of joint stock company, a form of business which enables the public to participate in providing capital in return for shares in the asset and the profit of the company. Briefly speaking, the income statement is a statement of profit and loss made during the year of the report, and the balance sheet indicate the asset held by the firm and the monetary claim against the firm. And the cost accounting. The Industrial Revolution in England presented a challenge to the development of accounting as a tool of industrial management. Costing techniques were developed as gates to management action, with the increasing awareness on the part of entrepreneurs and industrial managers for using scientific principles of management in the wake of scientific management movement led to the development of cost accounting. Management accounting. The advent of management accounting was the next logical step in the developmental process. The practice of using accounting information as a direct aid to management is a phenomenon of the 20th century, particularly the last 30 to 40 years. Social responsibility accounting. The social responsibility accounting is a new phase in the development of accounting and owes its birth to increasing social awareness, which has been particularly noticeable over the last 2 decades or so. Human resource accounting. Human resource, it way back in 1964, the first attempt to include figures on human capital in the balance sheet was made by Hermanson, which later came to to be known as human resource accounting. However, there had been a great socio-economic shift in the 1990s with the emergence of knowledge economy, a distinctive shift towards recognition of human and intellectual capital in contrast to physical capital. And inflation accounting. Inflation accounting is concerned with the adjustment in the value of asset, that is current and fixed, and of profit in the light of changes in the price level. In a way, it is concerned with the overcoming of limitation that arise in financial statements on account of the cost assumption, that is recording of the asset at their historical or original cost, and the assumption of stable monetary unit, that is these are discussed in detail in the next unit. Okay, and it thus aimed at correcting the distortion in the reported result caused by price level changes. Generally, rising prices during inflation have the distorting the influence of overstating the profit. Various approaches have been suggested to deal with this problem. Accounting personnel. There is hardly any organization which does not have an accountant. His role is pervasive and he is involved in a wide range of activities, particularly in a large and complex organization. The exact duties of an accountant might differ in different organizations. However, a broad spectrum of responsibility can be identified. The accountant can be broadly divided into two categories: those who are in public practice and those who are in private employment. The accountant in public practice officer offer their services for conducting financial and or cost audit. As such, they are known as auditors. The auditor examine the books of accountant and report on the balance sheet and profit and loss account of the company as to whether they give a true and fair view of the state of affairs of the company and its profit respectively. The auditor in a company is appointed by the shareholders to whom he reports. Public accountants are generally members of professional bodies like the Institute of Chartered Accountant of India or the Institute of Cost and Works Accountant of India. And interior auditor. Internal auditor is an employee of the organization in contrast to an external auditor who is paid a fee for his service. The internal auditor is responsible for performing monitoring activities and other services, including designing and operating the system of internal control, auditing the data reported to the directors of the company, and assisting external auditors. The head of the internal audit function and reported directly either to the chief executive or to the audit committee of the board of directors. And we should distinguish an internal auditor from an external auditor. While an internal auditor devotes his entire time and energy to the needs of one company, an external auditor serves many clients. The primary function of the external auditor, as pointed out earlier, is to safeguard the interest of the shareholders, by whom he is appointed by an independent and impartial appraisal of the financial transaction of the company, so that he could report on the net profit earned by the company and its financial positions. And the next is controller. Controller, the other name for chief accountant, is usually the head of the whole area of accounting, including internal audit. He is overall in charge of all the activities comprising financial accounting, cost accounting, management accounting, tax accounting, etc. He exercises authority both for accounting within the organization and for external reporting. We may enumerate the functions of the controller as follows. You just go through your material A, B, C, D like that. They are the functions of controller. And treasurer is there. He is the custodian, head manager of all the cash and near cash resources of the firm. The treasurer handle credit reviews and set policy for collecting receivables. Okay, the Financial Executive Institute makes the following distinction between controllership and treasurer. So there is a difference between controllership and treasurer. You just go through this column. Okay, and finance officer are there. Finance is the lifeblood of the business. Procuring financial resources and their judicious utilization are the two important activities of financial management. Financial management includes three major decisions: investment decision, financing decision, and dividend decisions. Investment decisions is perhaps the most important decision because it involves allocation of resources. It is concerned with the future, which, being uncertain, involves risk. Through financial management is regarded as a separate area. This function is performed in several countries, including India, by the accountant. Several large organizations, however, have a financial executive besides the chief accountant. Often, finance and accounting function are clubbed together in one person in small organizations. So, it will vary depending upon the organization and its functions and its how much it is a big or small organization. Like that, it will change its functions and also the positions of the person. So this is about today's section, and the next section is the accounting framework that we will discuss on next video. If you have any doubt or any questions related to this, you can contact our contact number or you can comment it on our comment box. So more videos related to MPA, you just do like, share and subscribe our channel. Thank you so much.
i-tutor ES presents IGNOU MBA, complete syllabus coverage classes and individual semester base, subject coverage program for MBA students, online and flexible sessions. For more details, contact 62382 17885.